start by thanking our chairman, who is working the hardest. He's working around the clock. Monimos. You know, he's going to be the chairman for life with our company. So thank you to everybody for coming back. Mr. Chairman, I think we will start with a keynote address by Mr. Pavlidis. Acis, you take over.
Welcome to the afternoon session. I'm privileged to moderate a very distinguished panel of bankers, ship financing bankers, and investment banking advisor. Paying heed to what the chairman has commented upon in the morning about timing, I have brought with me a ship's captain clock. For two reasons. Number one, lawyers like me tend to be more talkative than they should. And number two, bankers are very thrifty and frugal with their money in the bank, but very generous with the time also they expand on questions. Before I introduce our first speaker, please allow me to share with you the motto of our afternoon sessions on capital and ship finance. You can see on your screen a medieval painting of an ancient Greek philosopher, Heraclitus of Ephesus, 6th century. He was the philosopher who propounded the doctrine of change as being central to the universe. And he epitomized that concept and that doctrine in 5 laconic words, like the ancient Greeks used to do. That was quoted by Plato in Cratylus, and the words are "Tapandari hiuden mani." Everything flows and nothing remains still. Remember, dear delegates, 10 years ago and more, some of the leaders in the global ship financing banking sector, with billions of shipping portfolios on their books, Royal Bank of Scotland, Fortis, Commerzbank, Deutsche Schiffsbank, they have all gone. So did nearly all the American banks in ship finance. Continental Illinois, First Chicago, Bank of America. And the inevitable wind of change in the finance landscape has brought to us new exotic fruits from the East, Chinese leasing, but also alternative finance, which our distinguished panelists will expand upon later on. And last but not least, what we can call Mr. Louis Bochanis, Mr. Chairman of Hellenic Bank, the boutique ship finance banks of Cyprus, Bank of Cyprus and Hellenic Bank. May I now introduce Nicholas Pavlidis. He's our keynote speaker on this session, head of shipping at Bank of Cyprus, who set up the bank's new shipping center in Limassol. Nicholas, whom I had the privilege and pleasure to know from his old days with RBS, he has learned his ropes and earned his spurs with that great bank, which unfortunately came down when it became a taxpayer's bank, having been nationalized by the UK government. I would like to invite Nicholas Pavlidis of the rostrum to make his presentation. Thank you.
Thank you very much. I'm really honored and humbled to be among so many distinguished shipping people today.
and really excited to be representing Bank of Cyprus as the lead sponsor of this Capital Link event, a unique event which is so well organized by Nicholas and Olga Bornozis. Thank you very much. I would like to share with you some thoughts about the challenges banks face today in the field of ship finance and opportunities which I feel local banks like the Cypriot banks have in this sector. Over the past few years, notably since 2008 financial crisis, there have been significant changes in the way banks operate and assess risk. There are increased requirements for disclosure, transparency, enhanced due diligence. Banks have strong preference for corporate structures and disfavor bearer shares. Everyone working for a bank will tell you today how important compliance is, and it's part of our everyday life. Also importantly, capital adequacy rules have increased the cost of capital on lending. As a result, larger, more established shipping banks have restricted their shipping portfolios or even exited their shipping exposures, as Mr. Montanios just mentioned, altogether. So banks are compelled to be more selective on the clients and the projects they choose to support. These conditions have created pretty much a two-tier financing market between the large and smaller ship owners. Volatile shipping market conditions over the past few years have also exaggerated the disadvantage of smaller owners. Operational economies of scale and stronger negotiating power with charterers offer considerable advantage for larger owners. To illustrate the impact of this, there has been a reduction of the number of smaller shipping companies. In the Hellenic space, Greek and Cypriot shipping companies with fleets of up to 8 vessels, the number of such smaller companies have decreased by about 22% since 2008. This data is sourced by Petrofin Research. At the same time, the number of larger shipping companies has remained almost unchanged. As a result of the retraction of larger European banks, a number of alternative non-traditional sources of shipping capital have developed over the past few years, including financing from Asian banks for European owners, leasing, and in particular Chinese leasing, ECA, export credit agency structures. The above look at new building and modern vessel financing, mostly for larger and corporate-style ship owners. There's also been increased role played by private capital, equity funds, structures involving purchase and bareboat charter back. These types of financing may partly offer some competitive terms, like loan advance and repayment profile, but they're often more expensive and less flexible to change in case of need. Bank finance had traditionally remained the main source of ship financing, and in my view, it's the most flexible and cost-efficient. Now, the above changes have created a financing void, mostly for small, medium-sized, traditionally family-owned shipping companies. This is where I feel local banks have an opportunity to play an important role, providing shipping finance. The proximity to local owners, common culture and language, and in many cases, the relationship that already exists through accounts, deposits, and other services provided can help local banks, like the banks here in Cyprus, to develop selective shipping portfolios. In a counter-cyclical approach, the market conditions appear favorable at the moment, and with Cyprus being an increasingly important shipping center, shipping being an important contributor to the country's GDP, this development is a win-win-win for the banks, the customers, and the Cyprus economy as a whole. For the new banks, it is important to approach shipping conservatively, being focused on relationship banking. They must build the expertise in shipping and be selective on the clients. To meet the required returns, they will need to take advantage of available ancillary business like operational banking, FX, interest rate hedging instruments, wealth management, and other supported corporate financing opportunities. To conclude, I'm optimistic about the role that Cypriot banks can play in shipping finance, particularly in the Hellenic space. I have very recently moved to Cyprus and joined the Bank of Cyprus and found a very fertile ground to start a new shipping center here. We need to be careful in planning our strategy, remain disciplined, and take long-term view of the cyclical shipping market. Provided we do that, stay focused on close client relationships, and offer high-quality service, I firmly believe the Bank of Cyprus and other local banks can play an increasingly important role in shipping finance here in Cyprus and beyond. Thank you very much.
Mr. Chairman, I must congratulate Nicholas on your behalf, because as you can see, it's just in time. We move on now to our questions to the panel. And first, I would invite George Arcadis of AMRO, based in Athens, to share with us his answer to the following question. George, what are the merits of traditional bank financing vis-à-vis new sources or alternative sources of finance?
Thank you, Acis. Thank you very much, Nicholas, for asking me to participate in this panel. I think Nicholas just picked up a few points of what I was going to say. I think traditional bank financing has certain benefits over other sources of funding. For the shipping community and for the ship owners, I think the relationship issue is the most important one. Traditional ship owners, they want to stick to banks and borrow money from banks which have a shipping culture and tradition. It is very important for them. And that also provides a certain level of flexibility. Unlike what most people think, banks are usually flexible organizations. And we see that in the downturn of the market, when certain amendments need to take place. You might have a 100-page loan agreement, but behind the documents, it's the people. And we have seen in recent years how quickly banks were able to support their clients in such difficult times by coming up with balanced approach and solving the various issues that appeared as a result of the market conditions. So relationship and flexibility are quite key issues. I would also add the issue of efficiency. I think that banks are very quick in getting decisions. We probably need 4 to 6 weeks from the time of negotiation until the time a firm commitment can be sent out. And that I don't think it is the case with other institutions which are prepared or willing to do the same thing. And the last one is definitely costs. I believe that traditional bank debt is the cheapest, maybe by far the cheapest way of sourcing debt. And as it appears, you know, it's a win-win situation for the banks and for their clients, the shipping community. So I think going forward, traditional debt will remain the key source of funding for shipping companies.
Thank you, George. The next question goes to our friend from DNB Bank. I purposely do not pronounce his first name, because if I ask you, ladies and gentlemen, then you have difficulty of pronouncing Kjartan. My secretary yesterday taught me a new technological tool called how to pronounce .com. And I learned, like Mr. Boris Hedgeman has just said, that his name is pronounced Kjartan. Kjartan, a Norse name, and pronounced like that. Okay, Kjartan. In the changing world of today, what would investors need to know in order to access alternative funds, alternative finance from a bank like yours? What is the recipe?
Yeah, first of all, with a name like mine, you need to react to anything. So whatever the way you pronounce my name, I would probably react to that. So, but you did it well. Talking about the recipe without any mention of cooking the books, but I will give you a recipe and you would need to cook it. I think there are some key features for getting access to capital, whether it be banks or other sources of funds. And the industry is becoming more and more regulated, both on the shipping side, but also on the banking side. And I will mention the ingredients to you, and you need to put this together, and it's probably easier said than done, but I think from our perspective, having a good track record is important, and obviously as a newcomer you don't have that, so it's important then to either team up with somebody who has the track record, or simply struggle your way through some years of building it up. But we look for that, and investors look for that. Management and owner quality is becoming more and more important. And I say that because we have been through good and bad times recently, and the way people act in good times is one thing, the way they act in bad times is a completely different thing. And that's when you really learn whether you have a strong relationship or not, and the real quality of the people you deal with. Transparency, corporate governance are more and more important. Having a consolidated holding structure, I think, is the future. Greece has had a majority of SPCs instead of that, but we see a trend now towards more and more consolidated structures. I think that also helps in terms of transparency. You need the financials needed, obviously, and that is also an important point. Beyond the quality of the fleet, the age of the fleet, you need a solid financial setup to actually get more capital. The more money, in reality, the more equity and money you have, the more you get access to, which is a paradox, but that's the logic of finance, I guess. And then another topic that we discuss a lot in DNB these days is the approach to CSR. You may say, oh, and yet another point to highlight, but corporate responsibility is becoming more and more important. Some banks have discussions around how vessels are scrapped. You know, your approach and your value set in terms of the environment and new regulations in that regard has a bearing on your access to capital. So in reality, the combination of all the things I've just mentioned is probably what you need to target to maximize your chances for getting capital and as flexible as possible. Short recipe.
Thank you, Kjartan. Mark, let's move now to the strategic markets. Please let our delegates know what is happening in the M&A field and how capital availability is impacting growth in the shipping industry.
Sure. Thank you for that. I guess, you know, hearing the first two panelists who spoke well about the recipe for debt, the only thing I'd like to add is one of the recipes is actually adding in more equity. So people shouldn't lose track of the fact that balance sheet has become increased from a public market point of view and perhaps for a private ship owner to get finance. As I like to say, debt is a four-letter word. And having spent the last 8 or so years working with companies that had to restructure and perhaps didn't always do so well in the tough times, it's just a reminder to be raising equity, and the fact now that LIBOR is rising and margins are getting higher, maybe the fact that they're sort of converging a little bit from a price point of view may help in that regard. You know, the M&A side, frankly, has been sort of quiet of late, and part of the reason why is we haven't had a great functioning equity market. And when you look at most of the companies that are here, and we have some phenomenal companies represented on the panels and in the audience, many of them trade below net asset value. So you're not even getting paid the value of your underlying steel to be out there, and many of these companies have a lot of scale. So in that context, it's hard to create transactions and bring companies together. The other interesting thing we observe as strategic advisors is there's a lot of private companies out there, some of whom were formed by private equity firms, and many of them have been holding their investments for long periods of time. And you would think that some of these pieces would start to trade and you'd see more consolidation. But when ultimately those owners don't see a next step of going public, it's hard to bring two private companies together. And when you have public companies trading below the value of their steel, it's also hard to create M&A. So I wish I was sort of more upbeat on some of this, but hopefully that, you know, that sort of difficulty in the marketplace actually creates some opportunity for those companies that are particularly well capitalized or have particularly advantaged positions in the market.
Thank you, Mark. Our next panelist, Markus, has acquired his experience in Hamburg, one of the leading ship financing centers of the world. Markus, there are, I suppose, 250 delegates in this room. 50 out of them are potential clients of Hellenic Bank in ship finance. What are the factors banks look at nowadays when assessing a proposed ship finance transaction?
I think most of them have already been mentioned by my neighbor. I think from our perspective it's a triangulation between three factors. It's first the owner, it's second the asset, and it's third the market and the market outlook for this particular asset. The owner needs to have a clean track record, the owner needs to have the operational capabilities, the operational excellence to operate the vessels the owner is operating. It was mentioned earlier that during the good years it's easy to make money. During the bad years you really see who's a good operator and who's not. So we are looking at that. But we also look at the asset types because we understand that even the best owners will lose in a consolidating market. So you can't have, or you can have the best owner, but when the best owner has the wrong asset and there's no demand for that asset anymore, it's not a good value proposition. And thirdly, as I mentioned, the market outlook for this specific asset, and this is obviously very closely correlated to the asset type. To just give you an example, people, especially in the Hamburg market, sold Panamax container vessels for scrap 7 years old. And people were shocked, where I was asking myself, why were people shocked? Because when I started doing ship finance, it was in 2005, it was known information that the Panama Canal will be expanded. So the logical consequence of that is the vessels are getting bigger. So people have to ask themselves the question, what is the need for the old Panamax vessels going forward? And there I think owners as well as banks need to make the right investment slash lending decisions based on the thesis behind the investment slash lending. And another very important factor talking about owners again is alignment of interest. And you're mentioning I come from the Hamburg market. In Germany, it was pretty much KGs where there's no alignment of interest. So we are looking at privately owned companies, family-owned businesses, and we are looking at companies where there's alignment of interest between the shareholding and the management of the vessels. And we are not looking at investment vehicles where we have a huge number of investors and no UBO we can talk to when there's a problem. So this is very shortly what our philosophy is in lending.
If I understand well, do you follow the Credit Suisse model of ship financing, which started many years back by Chase Manhattan, combining the ship finance with wealth management?
I wouldn't compare Hellenic Bank to Credit Suisse, to be honest. We have a balance sheet of 7 billion, they have a balance sheet of what? The reality is, we are, I would say, as selective as they are when it comes to the counterparties. But I have to admit, we don't have the wealth management products they have. So we want to add value to our customers, and we can't add value in wealth management. But I think we can add value both in lending, but also, Nicholas mentioned it earlier, in operational banking and transaction banking, where we have a long history. So this is where I think we are well placed when compared to banks like Credit Suisse. But when it comes to the quality of our counterparties, I hope that we will be able to build. We have already built a portfolio, and I hope that we will be able to continue this path of building a portfolio with high quality counterparties.
Thank you for bringing to my notice that wealth management is out of question, but perhaps we should use the word, and I'm addressing Nicholas, relationship banking with your clients, which creates a very close relationship with the potential ship financing clients.
Yes, absolutely. And as was discussed earlier in the panel, this is people's business, and you need to focus on the people. But to continue on what Markus was saying, lending is an expensive exercise nowadays. So banks, and I think all banks in the world nowadays, seek the ancillary business to complement that. And relationship banking is, by definition, the banking that provides a holistic approach and services. Now, no one, I think us here in Cyprus, we don't have the capabilities of some of the bigger banks like Credit Suisse on the wealth management side, but there is a very good professional people here within the bank and within Cyprus that can provide very high quality services, and I see no reason why lending business should be complemented by operational wealth and other businesses, which I think it is the model and should be the model of every ship finance bank.
George, let me come back to you. With the substantial losses that shipping banks have incurred over the last years, is it still profitable to any banks to remain in shipping?
Well, relatively speaking, we have to compare the returns of shipping versus the returns of other sectors of the economy. And in that sense, I believe shipping is more profitable. In our bank, for example, shipping has one of the highest return on equities within our corporate and institutional banking portfolio. But we have to distinguish between the period before 2008 and the period after 2008, because a lot of things have changed since 2008. The structures have become much more conservative, and the pricing has more than doubled. What is very interesting about ship finance is the fact that the credit, due to the cyclicality of the shipping business, the credit rating of the shipping groups are penalized because of that. And that does not necessarily reflect their actual credit profile. In addition to that, there is another factor which cannot be quantitative, and this has to do with the support of the families behind the shipping groups. And for private companies especially, this is extremely important, and it cannot be incorporated into the risk rating model that the banks are using. Another very good reason which makes shipping profitable, or I would say more profitable than other sectors, is the fact that it's a capital-intensive business, and as a result of that, there are fewer transactions and larger transactions compared to other sectors again. So the cost base of shipping is much different than what it is in real estate, for example, or other sectors. For example, you might have a group of 10 people managing a portfolio of 4 billion. This is not the case with other sectors within the bank. And I think the last point has to do with how banks in general approach the client. We are talking about losses, but the question is how these losses appeared. I think that most of the losses today, and especially on the period after 2008, are associated with problems in the offshore portfolio or container ship transactions related to KD structures, which is not really the bread and butter business of shipping banks. If you take those factors out, I don't believe that the losses in shipping are higher than the losses in other sectors, in real estate, for example. At least this is not happening in my bank. I don't know if I answered.
Thank you, George. Ladies and gentlemen, I am one of the veterans in this conference with a couple of gentlemen I see on the front line, on the front sitting. My complaint to conference organizers throughout my long career was that the audience, the delegates, were never given the chance of putting the questions they wanted to put. This chance I will give to you today. Please raise your hand. I would like you to put the questions to the panelists who have not had a second round to express their views on the subject matter of their expertise. Captain Markus.
Sorry. Thank you. I want to congratulate you all because for τραπεζίτες μου φαίνεστε πολύ συμπαθητικοί. I just...
For the benefit of our non-Greek speaker, what Santiago said, for bankers, you look to be very sympathetic people.
Even with the difficult names, all of you, God bless you. Αλλά ο κύριος Παυλίδης δεν μας τα είπε καλά για τις μικρές εταιρείες, for the small companies that you seem to be not very encouraged, not very positive. Concerned. And you also brought up some statistics that the small companies reduce in numbers and the big companies have not increased in numbers. But what happened to the middle companies? The middle companies have increased. No, I don't know well, I know some family associated with smaller companies of mine, of ours, that are doing extremely well, with 5 to 15 ships. They have much better costs and much better results, much better control. And they live in, my cousins and late brothers, who are leaving their offices at least 2-3 hours earlier than I do. And let alone my son Nicholas, So, small companies are normally family companies that we all started somehow like this. In the present audience, you have a number of self-made people who are by far big ship owners today. Most of them are self-made companies, started with a few or one ship and with few millions or even hundreds of $1,000s. So, especially Greek shipping. And Greek shipping is a good example. If not the best, it's a good example. It's not like everything else starting with Greek. The Greek shipping is a good example. I think, I feel that we owe to pay much more respect, to have more time for them and follow them up like I have been followed by colleagues of yours. One of them, Greek, he had your name, was Dimitris of Pavlidis, his Ethnicis, father of our good dear colleague today, Lefteris Pavlidis. His father was in the shipping branch of National Bank of Greece in Piraeus. He followed my career with the first ships that I bought from with seller's credit. He financed my second ship, and he was doing so until I reached 10 ships, having himself introduced me to American banks, and we took it from there. So please, I talk too much, but please, I believe very, very strongly in this fresh blood in a business that is very much a business that has an excellent future for those who believe and act with these 3, 5 P, tennis master. Passion, etc. Thank you.
Ladies and gentlemen, may I draw the attention to the younger members of the audience who have not had the opportunity, the privilege and the honor of having met or having heard before Captain Panelists. I'm sure they do. I will not say many things, but on behalf of all the Cypriot delegates, Captain Panelioti, I would like to pay tribute to you because you have been one of the most faithful friends of Cyprus shipping since 1970. Yes, 1970, ladies and gentlemen, when Captain Panagiotis, a young master manager at the time, having just said goodbye to Captain Nicholas Babalios and Iris Shipping, bought his first ship, registered under Cyprus flag, and called it Aristar. What is Captain Sarkos and his group today? All you can find out from the press and from the north. A warm applause for Captain Sarkos.
To friends like them, because it is with your support and friendship that we going ahead. Thank you. Thank you very much.
Ladies and gentlemen, we will take another question.
Let me just say, if I may, Captain, thank you so much for extending and correcting what I said. If it didn't come through correctly, I was a bit concerned. The total number of companies in Greek shipping has decreased by about 140, 150 since the 2008 crisis, and that was mostly by the small ones. I haven't done the complete analysis of this, the smaller, the medium, and the larger size, and not disrespect to the larger companies, which I know you represent, but the smaller companies, which everyone started in, are considered the backbone of Hellenic shipping, and I am very excited and enthusiastic that the majority of the business that we'll probably be doing in the Bank of Cyprus will be on these type of clients.
Thank you, Nicholas. Ladies and gentlemen, another question from the audience, from the floor. Okay.
I can just add, because I see it from D&B's perspective on your good point. It's good to hear that some banks can concentrate on smaller owners and new setups. Looking at this from Norway, which is also an important shipping nation, part of the undergrowth of the shipping initiatives have disappeared over time because it was more and more difficult to get financing when you started up something. So you have fantastic people who had a good idea but couldn't put it into life because they lacked the initial, I would say, nudge to get it going. And the problem, I think, isn't that those who work in banks don't like these setups. It's in reality because regulations, the way you measure risk, FSAs, and the development of the regulatory world generally push banks, normally speaking, and luckily we have some exceptions, to go towards bigger and bigger companies, more consolidated structures and so on, which in reality, and back to George's good point, means that the risk is not perfectly reflected in banks' models. Those who work in this business know the real risk, but you can't get acceptance for that when you speak with third parties. And that's an industrial challenge, because you need the winners of tomorrow to actually be able to grow. So for Norwegian shipping, also, this is a concern. So there you are, just a comment.
Thank you, Kjartan. Mark will have the opportunity to speak to you later on as moderator, but the final chance to share with you his experience since he arrived in Cyprus goes to Markus. Markus, you have the floor.
Yeah, to just add my views to what was discussed regarding small or medium-sized owners. For Hellenic Bank, we focus on small to medium-sized owners. We believe that this is where we can add most value, because as we were hearing, the larger international banks are focusing on the large owners, on the top 5% basically. And everyone can judge whether today's rating systems and banking regulation is the right way to address an industry which is a commodity market. Shipping is a commodity market, and how do you want to reflect a commodity market in a financial model that is basically following trends, but in a commodity market you can have changing trends from one day to another, which is naturally difficult. So many of the traditional small to medium-sized owners do not meet the requirements international banks have, but by no means it means that they are worse performers or operators of vessels. To the contrary, we have seen a lot of small and medium-sized owners where we have looked into financing them where the operating expenses were lower than for large owners. And in my belief and in my experience, there can also be negative economies of scale when a company is growing too big. Because there's an aspect of micromanaging in shipping. When an owner is able to micromanage and control the costs, this is adding value to the owner through alignment of interest, whereas when a company is growing too big, 100+ vessels, where you have a corporate structure, a completely different corporate setup. Owner might not be able to be as hands-on as needed anymore. So I rather prefer to finance a small owner who has, say, 10 vessels, 15 vessels, than an owner who has 100 vessels and is underperforming on the operating expenses or overhead costs, which also plays a role. For small owners, we often have like management fees for the privately owned management company as well, of like $500 per day per vessel or even lower. I know examples of large corporate style companies where we have 2,000 a day. And this is making a difference in the actual performance, especially during the bad days when it really matters. So I think those are advantages of small owners. And I'm very afraid to see that this is a dislocated market, especially for the small to medium-sized owners, because, as I said, by no means they are worse in what they are doing.
Yeah, I could just add one thing quickly, and that is, from a capital market perspective, look, large size is in general better. So that's not to say you can't find a small company, get larger, and excel in the capital markets, but I completely agree with Markus, which may be a first name, Markus. It's about focus, and what is size does have diseconomies of scale, and I'm staring at a couple owners here, Paulus and Petros all the way in the back, who have done amazing jobs in terms of how they operate the vessels. I'm sure other companies here may mirror the performance, but when you see OpEx per vessel, at or near $4,000 a day, it's remarkable. And when you see them being able to properly scale the SG&A as well, that shows focus, and that can be, you can see focus in large companies or small companies, and you will get paid in the capital markets if you have that focus and that discipline.
Thank you, Mark. Thank you. Ladies and gentlemen, before we sit down, I have to read to you a letter. It was delivered to me by a young and charming lady. It is addressed to Mr. Nicholas Bornozis, President Capital Link. It's an open letter, so with the permission of the chairman, I will read it. Dear Mr. Bornozis, firstly, we warmly thank you on behalf of all Cypriot delegates for putting Cyprus on the shipping world map of Capital Link. However, we have a special request for you. Please do not organize another shipping forum in Cyprus, the island of Aphrodite, on St. Valentine's Day. Even with this sweet thought and equally sweet chocolate of Mr. Polis Hajouanou.